I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It's a huge day in the grain markets. We will touch on live cattle and lean hogs as well, but I first want to go over the price action that we saw today in the corn and soybean market following today's USDA WASDE report. We saw a big reduction in the carryout, which sparked a big rally in corn and soybeans. Corn here finishing up the day about 14.5 cents. Tagging these old contract highs and really taking them out with a high of 427.25. So phenomenal price action to the upside. Thank you to a friendly USDA report which showed the carryout is at 1.702 billion bushels. The average analyst estimate was 2.033. So a big surprise there. In fact, it was the biggest surprise for this particular report, the November corn carryout number in the last 21 years. With that said, it wasn't a surprise to everybody. In fact, October 16th, when we were trading at about 410, we had talked about the possibility that the market is pricing in something closer to a 1.8 billion bushel carryout. So I think the market's done a pretty good job at pricing this in, which means the upside mobility from here might be somewhat limited, especially knowing how extended the funds are. Now, does that mean we can't grind a little bit higher? No, absolutely not. The trend and the momentum is in control by the bull camp. So we could continue to see this market climb higher, but there is risk to the downside if you're jumping on this train to the upside. You missed out on a heck of a rally here. So I wouldn't be so quick to just say, wow, a big surprise in the carryout, gotta get long. I think you probably want to sit on your hands and let the dust settle a little bit more. Remember, cash is always a position as well. So keep that in mind going forward. Resist the FOMO, or the fear of missing out. And that can be applied to the soybean complex as well. Now, we've had a heck of a rally here this month alone. We are $1 off the lows. We tagged at $11.50 today, which is a price we haven't seen in years. And that's good to see for producers. As far as the speculative traders go, where is the next resistance line? Well, this is something we've talked about in other tech talks. It's really hard to find that, and it's more or less a fool's errand because there's no price action to go off of between previous interaction of buyers and sellers. So if you want to be long, great, but there is risk to the downside considering the velocity of this move we've seen. Obviously, we're in overbought territory now, but we were in more overbought territory just a few months ago. So this one is very dicey. We expect the volatility to continue going forward. The fundamentals, the momentum, the technicals, all in favor of the bull camp right now, but it'll be an interesting one in the next couple of months as I think we might start to run out of gas. It's just about when is that going to happen, when do those fundamentals change, when do the technicals change, and when does the money flow change. And one of the things going forward that a lot of traders are keeping a close eye on is weather in South America and their crop production down there. So we will keep you posted on any developments with that. As promised, we'll touch on live cattle and lean hogs. December live cattle here. Got a big bid yesterday. Tried to get a little bit of follow through today, but really got halted. We've got a trend line here from these highs going back to January. We couldn't quite get out above there, but we think that we can eventually push through this 112 and take us towards these August highs, which is a little bit closer towards 114. We've been pretty optimistic after holding technical support down here, and we remain optimistic that we can continue to work higher. Cash has really yet to develop fully, but we expect to see things firm up this week and in the next couple of weeks, barring any outside market movements that might disrupt that. And we can see 110, potentially 112, probably before long. Now, we have done some trading out in the April contract as well, mostly for hedgers. We tried selling 118.25, didn't get that big rejection from that triple top in the April contract, so lighten that up as well. And if we continue to see the fundamentals firm up a little bit, potentially get the April into the mid to low 120s, and we'll look at maybe potentially getting some hedges on again at that point. So money flow, technicals, fundamentals, I think remain optimistic here. We continue to see this live cattle contract make its way towards these August highs closer to that 114 level. And wrapping things up with the lean hog market. The lean hogs had a heck of a run here, and we're optimistic there. We got a bit of a double top all the way going back to last October, and a failure. And we've started to break down, and we're forming a little bit of a head and shoulders. And this line right here is going to be a big one going forward. This comes in right at about 64.5. This is the bottom end of the recent range, and kind of where we stalled out back in September, and then the secondary breakout point in October. If we break and close below here, there are some gaps on the chart right here and right here that we're keeping a close eye on. So a little bit closer towards 60. If 64.5 gives way, we wouldn't be surprised to see a whoosh lower. So we are optimistic cattle, a little bit pessimistic on the lean hog side as we start to form what looks to be lower highs and potentially lower lows here in the very near term. This is Oliver Sloup with Blue Line Futures, and that is today's Tech Talk. If you have any questions, please give us a call. Shoot me an email, Oliver@Blue Line Futures. But remember, trading futures involves substantial risk of loss and is not suitable for all investors. Thanks a lot.